5-minute finance, introductory videos to give you a good idea of all the financial topics that you're going to experience during your life. We're talking about health insurance, homeowners insurance, but before that, let's rewind real quick. Life insurance, you pay the premium or you pay a monthly payment so that when you pass away, money will be given to your family to help out with a funeral and also help out with the family paying bills, etc. Auto insurance, you make monthly payments every single month, and if something bad happens, they'll pay to fix the car that you damaged, and they'll also pay to fix your car or help you get another car. Same thing with health insurance. I'm not going to go into comprehensive explanation of health insurance. Not going to happen. You can look all over online. You can read books and books and books all about health insurance. But let me just give you the basic premise of how health insurance works. You make monthly payments and you hope to God that you never have to use your health insurance. But if you do, if you get sick, if you need surgery, if you have to go in for a checkup, you show up, you get the procedure. Now, this is all in a perfect world. You get what you need, and the health insurance company pays for it. You don't pay anything because you paid your monthly payment, and when you needed something, you got it, and the health insurance company pays for it. Not always the way that it works, unfortunately, but that's the way it's supposed to work. I'm going to save that for another day. But again, it's just the same example of the other insurance. You make monthly payments, and then when you need something done, the insurance company takes care of it. Homeowners insurance, you make monthly payments, and if something bad ever happens to your house, instead of you paying out of pocket, instead of you going to the bank and getting money, instead of you going to the bank and taking out a loan to pay for the damage, the insurance company comes and fixes it. Let's say a tornado knocks over your house. Let's say a hurricane destroys your house. Your $200,000 home is gone. Well, guess what? The insurance company will cut you a check for $200,000. They'll help you find a new house, help you build a new house. It's taken care of because you made monthly insurance payments. As long as you have insurance, you're making monthly payments. If something bad happens, they'll take care of it. Even if it's just like a tree falls through a window or something happens small to your house, insurance company, boom, boom, boom. You've seen the commercials with State Farm and all those different insurance companies. You make monthly payments. If something bad happens, they come and take care of it for you. A warranty. You may have had this happen. Let me just give you an example. I bought a weed eater a couple days ago. I went into Lowe's, $60, pretty cheap weed eater. But then they said, hey, for $20 more, we'll give you a 1-year warranty. Meaning that if this weed eater breaks within 1 year, Lowe's will give me a new one. If I don't get the warranty and mine breaks, then I don't get a new one. I had to make a choice. $20, I will have protection for a year. Well, to me, it was an easy no, because $20, that's 33% of the purchase of that good. That's a 33%, 1/3 of the product for a warranty for just 1 year. And it's $60. No big deal. I said, no, I'm just going to take care of my weed eater. I'm going to be smart with my weed eater, and I'm going to make it last. It's a risk. I'm going to take a risk. Other times, maybe you make a different purchase. You may want to get that warranty, that 1 year, that 2-year warranty. It depends on how much you're spending. It depends on what you're buying. It depends on your own practices. If you're buying a weed eater for your son and you know your son is an absolute lunatic, you're probably going to want to get the warranty because he's probably going to break it. You have to make the decision based on what you expect to happen. And for me, knowing how I'm going to use it and how often I'm going to use it, the warranty is going to be a waste. It's not going to break in a year because I'm not going to use it that much in a year. If I was going to use it every single day, if it was my job to do weed eating, then yeah, I would get the warranty. But for this, the price just did not make any sense. It's up to you to decide if you want to get warranties or not. You don't have to get them. Sometimes it's smart. It depends on the situation. Mortgage and home ownership. So home ownership. If you want to own a home, unless you've got $300,000 sitting in your pocket, you don't. Unless you have $100,000 sitting in the bank, most of you don't. You then have to get out a mortgage. What is a mortgage? It's a loan for your house. You borrow the money from the bank. That means technically the bank owns your house until you pay off that loan, and then you are a homeowner. That's simply it. Most people cannot pay the full price, $100,000, $200,000, $300,000 for a home out of pocket. So you are never going to own the house likely right out of the gate. You're going to live in the house for 10, 20, 30 years, but you never technically own it. Technically, the bank owns that house because the bank bought the house. They loaned you the money to get the house. So technically, they own the house until you pay off that mortgage or you pay off that loan. It is their house. But once you pay it off, they'll give you the paperwork and say, okay, you now officially own the house, keep living there, or you can sell the house to someone else. Mortgage calculator. So $200,000, 3.92% interest for 30 years. You're going to end up paying $340,000 for a, it's scary, it's terrifying, isn't it? What? So if in perfect example, if you can get a lower interest rate, awesome. If you can pay this thing off within 30 years, awesome. If you can borrow less, awesome. But that's just the way it works. $1,000 a month doesn't seem that bad, but when you calculate for 30 years, yikes.